Okay, sorry about that. We got a part 2 of the video now. So what I'm looking at is these April expiration USO puts, looking at the 30 strikes. Now they're so these are the puts over here. So they're trading for about 32, 33 cents right now. So it's very far out of the money. I know it's expecting a big move. So in theory, this would probably be a lower probability trade. So you're not going to bet the farm. You're just going to I'm just going to take a calculated risk there on this, but the potential return, let's look at that. What I believe is likely to happen is we're likely to see the oil come down to the $26 a barrel. Now, if that happens, the intrinsic value on those 30 strike puts would be around $4 at that point. So you'd have 30-cent option going up to $4, which is already about a 13-fold increase. Plus, you're probably going to have a significant amount of time value. The time value is going to increase and then maximize as that option moves towards $30. So, depending on how long the move takes and how close that happens to expiration, as price comes down from here towards the the $30 strike level, if we have a $30 put option, that would be where the maximum time value is in the option. So the option time value will increase as the market gets here, and then it'll start to decrease if the market continues lower, but we still should have some time value. So you're probably looking at somewhere like a 15, 16 to 1 potential reward on this trade, which is, if you're going to trade options, that's why you trade them, is for these huge type of moves. So what I'm planning on doing is putting an order to buy on the open some April 2012 30 strike puts on USO. And basically what I'm going to do is I'm not going to use the USO chart to track the trade. I'll actually use the oil futures chart, because there's not decay issues in that like there is with to some extent with the USO. And then as price comes down and potentially breaks the October low and that trend line that I already showed, that's where I'll be putting some orders in to exit that trade, hopefully when oil's somewhere down here around $67, $66 a barrel. So that's what I'm planning on doing. I'm going to try and make another couple video updates on gold and the stock market here soon. We're just really at some potential major turns. It looks very, very, very high probability the oil is going to dramatically decline. It looks that way in gold too, and while the data is maybe less clear to me on stocks, I can't really see the stock market holding up if we see these type of declines in oil and gold that it's set up for here. So we're probably going to see kind of in unison a deflationary theme. What will happen with bonds in that? Typically the correlation is the long-term U.S. bonds will actually spike on that. Now, I know if you've followed post recently, I'm actually longer term bearish bonds, but so we'll see how that plays out. I'm thinking we'll probably see a spike above the highs in bond prices and continue to work on forming kind of a major topping pattern in bonds, and I'll follow that, and we'll trade that as that comes available here. So that's what's going on. I'm going to cut that video off here so everybody can get that information, and I'm going to try and do more of these video updates here as we go. I think I'll be able to get more information. Hopefully they'll be shorter than these videos, but I can kind of compact what I'm seeing here, and you can get a better feel for all the stuff I'm looking at. Okay? Have a great day and profitable trading.